Japan's economic landscape is a complex mixture of traditional industries, advanced technology, and unique demographic challenges. As the third-largest economy in the world by nominal GDP, Japan plays a crucial role in the global market. Historically, Japan has been recognized for its rapid post-war economic growth, becoming a leader in sectors such as automotive manufacturing, consumer electronics, and heavy industry. In recent years, however, the economy has faced slower growth, largely due to structural challenges such as an aging population, labor shortages, and deflationary pressures. Despite these obstacles, Japan continues to be a vital player in global trade, innovation, and technological advancement. One of the most significant factors in Japan's economic performance is its currency, the yen, JPY. As one of the world's most traded currencies, the yen is often viewed as a safe haven asset during times of global uncertainty. This perception stems from Japan's long-standing political stability and strong financial institutions. The yen's value fluctuates in response to various factors, including Japan's monetary policy, international trade balances, and global economic conditions. In recent years, however, the yen has weakened significantly against other major currencies, such as the US dollar, prompting concerns over Japan's competitiveness in the global marketplace. The yen's role in the global market extends beyond Japan's borders. As a major currency for international transactions, particularly in Asia, the yen serves as a benchmark for many economies. It is commonly used in foreign exchange reserves and is an essential currency for trade settlements between Japan and its partners, including China, the United States, and the European Union. A strong yen can make Japanese exports more expensive, hurting domestic manufacturers, while a weak yen boosts export competitiveness but raises the cost of imports, particularly energy, which Japan heavily relies on. Japan's monetary policy, guided by the Bank of Japan, BOJ, has played a key role in influencing the yen's value. For years, the BOJ has employed ultra-loose monetary policies, including negative interest rates and aggressive asset purchases, to combat deflation and stimulate growth. However, these policies have also led to a depreciation of the yen, which, while boosting exports, has raised concerns about inflation and the country's growing public debt. The BOJ's balancing act between stimulating the economy and managing the yen's volatility remains a focal point in Japan's economic strategy. In the global context, the yen's fluctuations have significant implications for international markets. Investors and policymakers worldwide closely monitor the yen, as its movements often reflect broader economic trends in Asia and beyond. Japan's economic health is deeply intertwined with global supply chains and financial systems, meaning shifts in the yen can influence everything from commodity prices to stock markets. As Japan navigates its current economic challenges, the role of the yen will remain central not only to Japan's economic future, but also to the stability of the global economy. The yen has experienced significant fluctuations in recent years, reflecting the challenges facing Japan's economy and its monetary policy. In 2024, the yen's value has declined notably against other major currencies like the US dollar and the euro, reaching some of its weakest levels in decades. These fluctuations have been largely driven by the Bank of Japan's commitment to maintaining ultra-loose monetary policy, even as other major economies like the United States and the European Union have tightened their monetary policies in response to rising inflation. As a result, the interest rate differentials between Japan and other developed economies have widened, putting downward pressure on the yen in foreign exchange markets. Several factors have contributed to the yen's current weakness. One of the primary reasons is Japan's persistently low interest rates, which have remained negative or near zero for years. The Bank of Japan's decision to keep these rates low is aimed at stimulating economic growth and combating deflation, but it has also made the yen less attractive to investors seeking higher returns. Additionally, Japan has been running a trade deficit due to increased import costs, particularly for energy, as the country relies heavily on imports to meet its energy needs. The weak yen has further exacerbated these costs, making it more expensive for Japan to buy energy and raw materials from abroad. The consequences of a weaker yen extend beyond Japan's borders, affecting its trade relationships with key partners like the United States, China, and the European Union. On the one hand, a weaker yen has made Japanese exports more competitive, boosting sales of Japanese goods abroad, particularly in industries like automotive and electronics. On the other hand, the increased cost of imports has squeezed Japanese companies and consumers, leading to higher prices for goods and services domestically. This has created a delicate balance where the benefits of stronger export performance are offset by rising inflation and higher import costs. Globally, the weakening yen has also sparked concerns about competitive devaluation and currency wars. As Japan's currency declines, it puts pressure on other export-driven economies to take measures to protect their own industries. This has led to fears that countries may engage in tit-for-tat currency devaluations to gain a competitive edge in global markets, which could disrupt international trade and financial stability. The situation is particularly sensitive in Asia, where Japan's key competitors, such as South Korea and China, are closely monitoring the yen's movements to assess how it might affect their own trade balances and economic growth. Japan's economy in 2024 continues to be shaped by a combination of global and domestic challenges. While the country remains a significant player in international trade and innovation, economic growth has been slow, largely due to structural issues and external pressures. Japan's GDP growth has been modest in recent years, with the latest data from the third quarter of 2024 indicating a slight increase of 0.7%. This growth, while positive, falls short of the robust levels seen in the past and is below the global average. The country's reliance on exports, coupled with fluctuating global demand and the weakening yen, has had mixed effects on overall economic output. Japan is grappling with maintaining stable growth while balancing its trade relations, domestic challenges, and the need for innovation in key sectors. Inflation has emerged as a critical issue for Japan's economy in 2024. After years of combating deflation, the country is now facing inflationary pressures due to the weakening yen and rising import costs, particularly for energy and raw materials. Consumer prices have risen, with inflation reaching 3.2% in mid-2024, higher than Japan's historical trends. This has impacted consumer spending, as households are now more cautious with their expenditures due to the rising cost of living. While some industries, such as electronics and automotive, have benefited from increased export competitiveness, the domestic market is feeling the strain as everyday goods become more expensive, reducing purchasing power for many Japanese consumers. A significant long-term challenge for Japan's economic growth is its rapidly aging population. The demographic shift, which has been ongoing for decades, has now reached a critical point where the shrinking workforce is exerting considerable pressure on productivity and economic output. By 2024, Japan's working-age population has declined significantly, and this trend shows no signs of reversing. The labor shortage has led to increased automation and the need for policies to attract foreign workers, yet these measures have not fully offset the declining workforce. The aging population also means fewer consumers, which affects domestic demand and limits economic expansion. In addition to the shrinking workforce, Japan is also facing a rise in healthcare costs as the population ages, with a growing number of elderly citizens requiring medical attention and long-term care. The country's healthcare system is under strain. The government's expenditure on healthcare has increased substantially, with projections for 2024 showing healthcare spending will account for over 10% of the national GDP. This rising financial burden is further compounded by the lower tax revenues generated from a smaller workforce, creating a fiscal challenge for the government. The balance between managing healthcare needs and maintaining economic stability will be a critical focus for policymakers in the coming years. The Bank of Japan, BOJ, plays a pivotal role in shaping the country's economic policies, and in 2024, Its monetary policy remains focused on maintaining stability amid numerous challenges. The BOJ continues to employ an ultra-loose monetary policy, characterized by quantitative easing, QE, and negative interest rates, aimed at stimulating economic growth and fighting deflation. Quantitative easing involves the BOJ purchasing government bonds and other financial assets to inject liquidity into the economy. This has been a key strategy for the BOJ since the early 2010s, and in 2024, the bank shows no signs of deviating from this approach, despite rising inflationary pressures. Negative interest rates, introduced in 2016, remain in place, meaning that financial institutions are charged for holding excess reserves with the BOJ, encouraging them to lend more to businesses and consumers. The BOJ's continued use of these policies highlights its commitment to supporting economic growth and achieving a stable inflation rate of around 2%, a target that Japan has struggled to consistently meet. However, the side effects of prolonged monetary easing are becoming increasingly apparent. The combination of negative interest rates and aggressive asset purchases has weakened the yen, making imports more expensive and contributing to rising inflation. While a weaker yen has boosted Japan's export-driven industries, the downside has been higher costs for energy and raw materials, which are predominantly imported. This has raised concerns about the sustainability of the BOJ's approach, particularly as global central banks, such as the U.S. Federal Reserve and the European Central Bank, have begun tightening their policies to counter inflation. Looking forward, there is significant debate about the future direction of BOJ's monetary policy. Some analysts argue that the BOJ may need to consider tightening its policy by raising interest rates or tapering its asset purchases to curb inflation and prevent further depreciation of the yen. However, such moves could risk stalling Japan's already slow economic growth, particularly in a domestic market that is still recovering from the impacts of the COVID-19 pandemic. Tightening could also lead to higher borrowing costs for businesses and households, which might stifle consumption and investment. Given Japan's unique economic conditions, the BOJ faces a delicate balancing act in determining the right moment to pivot from its current policies. On the other hand, there are arguments in favor of the BOJ maintaining or even easing further, especially if Japan's economic growth continues to stagnate or if external shocks, such as global recession fears or geopolitical tensions, worsen. In this scenario, the BOJ may opt to expand its asset purchase program or deepen negative interest rates to provide additional stimulus. However, such actions would further weaken the yen, potentially intensifying inflationary pressures and increasing Japan's trade deficit. The BOJ's reluctance to follow the tightening trends seen in other major economies reflects its focus on sustaining domestic economic activity, even if it means accepting the risks associated with a weaker currency. Ultimately, the future of BOJ's monetary policy will depend on how Japan's economy evolves over the next few quarters. If inflation continues to rise beyond manageable levels, pressure on the BOJ to tighten will increase. Conversely, if economic growth remains sluggish, the bank may feel compelled to maintain its accommodative stance. The global economic environment will also play a critical role in shaping these decisions, particularly as Japan's economy is highly sensitive to international trade and currency fluctuations. Whatever path the BOJ chooses, its policies will remain central to Japan's economic outlook in 2024 and beyond. Japan's economy is supported by several key sectors that have historically driven its growth and continue to play a central role in 2024. The automotive industry, electronics and technology, and agriculture and fisheries are three major pillars that contribute significantly to the country's economic output and global standing. Each sector faces unique challenges and opportunities in the modern era as technological innovation, shifting consumer demand, and global trade dynamics reshape the landscape. The automotive industry remains one of Japan's most important sectors, contributing heavily to the country's exports and employment. Japan is home to some of the world's largest and most influential car manufacturers, including Toyota, Honda, and Nissan. Despite challenges posed by the global supply chain disruptions and the ongoing transition to electric vehicles, EVs, Japan's automotive sector remains globally competitive. In 2024, the latest sales data indicates that Japanese automakers have maintained a strong market share both domestically and internationally. While global demand for internal combustion engine vehicles has slowed, Japanese companies have made significant investments in hybrid and electric vehicle technology, allowing them to remain leaders in the EV market. However, competition from other regions, particularly China and the US, is intensifying, prompting Japanese automakers to focus on innovation, sustainability, and smart vehicle technology to stay ahead. In the electronics and technology sector, Japan continues to be a global leader, although it faces fierce competition from South Korea, China, and other tech-driven economies. Japan has long been renowned for its consumer electronics, such as cameras, televisions, and home appliances, but the country has shifted its focus toward high-tech industries, such as robotics, artificial intelligence, AI, and semiconductors. Japanese firms like Sony, Panasonic, and Fujitsu remain influential, while emerging tech companies are driving innovation in areas like 5G, renewable energy technologies, and automation. In 2024, Japan is pushing forward with digital transformation initiatives, seeking to modernize both the private and public sectors with cutting-edge technologies. However, the semiconductor shortage and the need to secure supply chains for critical components have created challenges that Japan must address to maintain its competitive edge. The agriculture and fisheries sectors, while smaller in comparison to automotive and electronics, are vital to Japan's economy, particularly in terms of food security and rural employment. Japan's agricultural sector is known for producing high-quality products, including rice, vegetables, and fruits, which are staples of both the domestic market and exports. In 2024, Japanese agriculture faces significant hurdles, including an aging farming population, limited arable land, and the effects of climate change. However, the government has been working to promote sustainable agriculture and technological innovation, such as smart farming and precision agriculture, to increase productivity. In fisheries, Japan is one of the world's largest seafood consumers and exporters. The sector is increasingly focused on sustainability due to overfishing concerns and the need to manage marine resources more effectively. Efforts are being made to modernize fishing fleets and adopt sustainable practices to preserve Japan's rich fishing heritage while meeting global environmental standards. Each of these sectors is undergoing transformation as Japan adapts to global shifts in technology, consumer preferences, and sustainability requirements. The future of Japan's economic competitiveness will depend on how well these industries embrace innovation and adjust to new realities, such as the rise of electric vehicles, the growing demand for renewable energy, and the challenges posed by environmental change. Japan's trade and foreign relations are central to its economic success, with the country relying heavily on strong export markets and strategic partnerships. As one of the world's leading exporters, Japan has established numerous trade agreements and maintains close economic ties with key global players, including the United States, China, and the European Union. These relationships are vital not only for Japan's economic growth, but also for ensuring access to resources and markets that sustain its industries. However, Japan's reliance on global trade makes it vulnerable to supply chain disruptions and shifts in the international economic landscape. Japan's trade agreements with various countries and regions have enabled it to secure stable export markets. One of the most important relationships for Japan is with the United States, its largest export destination. Japan-US trade relations have traditionally been strong, with both countries benefiting from the exchange of goods such as automobiles, machinery, and technology. In recent years, Japan has worked to strengthen this relationship, particularly in the face of challenges such as tariffs and shifting U.S. trade policies under different administrations. The trade deal signed in 2019, which eliminated tariffs on some agricultural and industrial goods, further solidified this partnership. In 2024, the U.S. remains a critical market for Japanese exports, particularly in the automotive and electronics sectors, and the two countries continue to collaborate on trade, security, and technological development. Another key player in Japan's trade network is China, its largest trading partner. Japan-China economic ties have grown steadily over the years, with China serving as both a major export destination and a critical supplier of raw materials and components for Japanese industries. In 2024, the relationship between Japan and China remains complex, marked by both cooperation and competition. While Japan relies on China for its role in global supply chains, particularly in the manufacturing of electronics and machinery, geopolitical tensions and issues related to regional security have occasionally strained the relationship. Nonetheless, the economic interdependence between the two countries is significant, and Japan continues to prioritize stable trade relations with China to ensure the flow of goods and resources vital to its economy. The impact of global supply chain disruptions has been a major concern for Japan in recent years, particularly as the world recovers from the COVID-19 pandemic and faces ongoing geopolitical tensions. The disruptions in global logistics, caused by factors such as port delays, shortages of raw materials, and transportation bottlenecks, have affected many of Japan's key industries, including automotive, electronics, and manufacturing. In 2024, these supply chain issues continue to pose challenges, leading Japanese companies to reassess their sourcing strategies and diversify their supply bases. For instance, the semiconductor shortage has significantly impacted Japan's technology and automotive sectors, prompting the government and private sector to invest in domestic production capacity and secure alternative suppliers. Japan's approach to mitigating supply chain disruptions has included not only increasing domestic production, but also seeking stronger trade agreements and partnerships to ensure supply chain resilience. Initiatives like the Regional Comprehensive Economic Partnership, RCEP, which includes China, South Korea, and several ASEAN nations, have provided Japan with a framework for enhancing regional trade and collaboration. Additionally, Japan has looked to deepen ties with Europe through the Japan-EU Economic Partnership Agreement, EPA, and has explored opportunities to strengthen economic ties with other Indo-Pacific countries as part of its broader strategy to reduce dependency on any single market or supply chain. Japan faces both significant challenges and promising opportunities for growth as it navigates the economic landscape of 2024. Two of the most pressing areas where Japan is focusing its efforts are the green energy transition and digital transformation. As global environmental standards and technological advancements evolve, Japan's ability to adapt and innovate in these areas will be crucial for sustaining long-term economic growth and competitiveness. One of the biggest challenges Japan faces is its commitment to achieving carbon neutrality by 2050. As part of this goal, Japan is undergoing a major green energy transition, which involves reducing its reliance on fossil fuels and increasing the use of renewable energy sources. Historically, Japan has been heavily dependent on imported fossil fuels, particularly following the 2011 Fukushima disaster, which led to a sharp reduction in nuclear energy use. As a result, the country has had to find alternative energy sources while also addressing rising energy costs and ensuring energy security. In 2024, Japan is investing heavily in renewable energy technologies, such as solar, wind, and hydrogen, as part of its strategy to meet its carbon neutrality goals. This transition presents significant opportunities for innovation and growth in the green technology sector, though it also comes with challenges related to infrastructure development, regulatory frameworks, and the need for greater public and private sector collaboration. Japan's green energy transition is further supported by its ambitious sustainability goals, which aim to not only reduce greenhouse gas emissions, but also promote a circular economy and improve resource efficiency. The government has introduced policies to encourage businesses to adopt more sustainable practices, such as reducing waste, recycling materials, and minimizing energy consumption. These initiatives are creating opportunities for growth in industries such as clean energy, sustainable manufacturing, and environmental technology. Companies that innovate in these areas are likely to benefit from both domestic and international demand, as the global focus on sustainability intensifies. However, Japan will need to overcome challenges related to technological development, investment in infrastructure, and ensuring that industries can make the transition without disrupting economic activity. In addition to the green energy transition, Japan is also focusing on digital transformation as a key driver of future growth. The COVID-19 pandemic accelerated the adoption of digital technologies in both the public and private sectors, and Japan has recognized the need to continue this momentum to remain competitive in the global market. Digital transformation in Japan's business landscape includes the adoption of artificial intelligence, AI, big data, cloud computing, and the Internet of Things, IoT, to improve efficiency, enhance productivity, and foster innovation. Japanese companies, particularly in manufacturing and service industries, are leveraging these technologies to streamline operations, optimize supply chains, and develop new products and services. However, there are challenges related to the digital skills gap, data security, and the need for more agile regulatory frameworks that can support technological innovation. On the government side, digital transformation has become a priority to improve public services, increase efficiency, and address the aging population's needs. In 2024, Japan is continuing its efforts to modernize government systems and infrastructure, particularly through the implementation of e-governance initiatives and the promotion of digital identity systems. These initiatives are designed to make government services more accessible, efficient, and transparent, while also reducing administrative burdens on both citizens and businesses. The creation of Japan's digital agency in 2021 marked a significant step in coordinating the country's digital transformation efforts, and its continued work will be essential in ensuring that Japan remains competitive in the global digital economy. While both the green energy transition and digital transformation present challenges, they also offer substantial opportunities for Japan to position itself as a leader in the global economy. Success in these areas will depend on Japan's ability to invest in research and development, foster public-private partnerships, and create a regulatory environment that supports innovation. As Japan continues to tackle these challenges, the potential for economic growth through sustainability and digitalization will be a key focus for the country in the coming decades.